Hey, hi, this is Kribakaran Rajendran. So in this video, we are going to talk about advantages and disadvantages of rule-based trading. So first, let me explain what is rule-based trading. Whenever we trade, like whatever the stocks that we wanted to buy, so when you are trading with the complete rules, like when to enter, when to exit, what should be the quantity that you need to buy, which instrument that you need to trade. So when the complete rules is built and when you trade based on these rules, that is what you call it as rule-based trading. It doesn't need to be very complex. It can be very as simple as like buying a stock when it trades above 200-day moving average or selling it when it closes below 200-day moving average. These simple things can be considered as rule-based trading. So first, let's talk about what are the advantages of rule-based trading. See, why many people are getting into rule-based trading these days is, if you consider, most of the people, what they do is like they trade based on certain chart patterns. So chart patterns like cup and handle or head and shoulder or trend lines. So these are certain things which people trade, which is subjective in nature. So what seems to be a head and shoulder pattern for you might not look like the same thing for me. Similarly, the trend lines people draw from one point to the other, you would be drawing at a different line and the other person would be drawing at a different line. So these things are subjective in nature. So it's not very clearly objective. So by moving to rule-based trading, everything is completely objective and it is much easier for you to verify all these things. And the very biggest advantage is backtesting. Whenever you wanted to test certain ideas, rule-based trading will clearly help you out with that, because you are quantifying the rules clearly with defined strategies. Like for an example, I wanted to enter at 9:30 when these conditions are met, and I wanted to exit when these conditions are met. So you are precisely giving the rules and it is easier for you to backtest those rules. You cannot backtest certain chart patterns like head and shoulders, or you can't backtest patterns like cup and handle. So these are subjective in nature, so we cannot backtest it. So with rule-based trading, whatever the rules that we create, it is easier to backtest. So when you backtest for a longer period of time, 5 years or 10 years, or like whatever the periods, whenever you backtest it, it gives you conviction to place that trade, because you have checked whatever the trading tools that you have built over the period, like past years, and then it tells you this is the overall results. Then what you do, okay, based on the historical results, this has given me very good profits. So now your conviction will be there, your confidence will be there. Then you go ahead and start trading in live. So the biggest advantages is backtesting, that clearly tells you how your strategy would have performed in the past based on the historical test, and then it gives you a clear-cut idea, okay, you can go ahead or not. So when your trading strategies or trading rules that you create, if it is not profitable in the back test, then definitely it would not be profitable in live test. So you can discard it and then work on the new trading rules. And another biggest advantages is easy to execute. Like if you observe, most of the rule-based trader, what they do is after they create the rules, they'll just execute their orders in the morning and then they'll continue with their research work or other day-to-day job. If they have, they'll focus on that. They don't need to sit in front of a system throughout the day. Whatever the rules that they have created, they would have entered in the morning, they would have put the stop loss and they would have left. They don't need to sit in front of the system and keep monitoring the charts. This would be really a very haunting task for people who have day job as well as people who have to trade. Then they have to manage both the trading as well as their job. By moving to rule-based trading, they could clear-cut define their rules clearly and state, okay, I wanted to enter 9:20 in the morning, I wanted to put the stop losses, and once they put the stop losses, they'll go and continue their work. They don't need to sit between 9 o'clock to 3 o'clock and monitor the trades. And once they place the trades, it is much easier for them to get it executed, and by the day end, they'll check, okay, this is how the system has performed. On the other hand, the trader who doesn't follow rule-based trading, they have to sit and monitor the charts and then try placing the trades, which is going to consume a lot of time. So the biggest advantage with respect to rule-based trading is the time. You could save a lot of time with respect to execution. And another biggest advantage is discipline. Many people say that to be a successful trader, you have to be disciplined with the process. So rule-based trading help you out with following that process. When you do not have any rules to follow, definitely it is hard to be a disciplined trader. But rule-based trading tells you a particular process which you need to follow. Like this is the set of rules that you need to trade. This is the set of executions that you need to follow. So when everything is clearly defined, it is easier for you to follow those process, follow those rules. So once you follow a set of rules for a prolonged period of time, you automatically become a disciplined trader. So that is why you could see most of the traders who are successful out there, they have their own process, they have their own rules. So when they continuously follow the same rules over a period, they automatically become a disciplined trader, which eventually helps them to become a profitable trader. And another advantage that I would see with respect to rule-based trading is risk management, because rule-based trading clearly defines your risk. See, this is my entry, this is my stop loss. So if my entry is 100 rupees and my stop loss is 95 rupees, then 5 rupees is my risk. So before you enter into a trade, the rule-based trading clearly tells you, okay, this is my risk which I'm willing to take in this trade. So accordingly, you could size your positions, accordingly you can manage, plan your money management. So everything comes in place. So only when you have this set of defined rules, the rest of the things, risk management and money management, would come in play. If you do not have any rules, if you just place an entry and if you just sit and observe the markets and try to exit based on your own intuition, then you won't have defined risk parameters. So risk management greatly helps with respect to rule-based trading, as it clearly tells you when to exit from a stock before even you enter, because that is what the rule-based trading is all about. You clearly define the rules about when to enter and when to exit, where to keep the stop losses, where to keep the targets. So when everything is defined, risk management becomes much more easier for you. And the last one is, it helps you with the diversification. So when you follow a rule-based trading approach, you could diversify with multiple instruments. You could trade with Nifty, you could trade with Bank Nifty, you could trade with currencies, commodities. You can trade multiple instruments because you can clearly define the rules for each and every instrument, and accordingly you could place a trade and execute it by yourself. So diversification would not only helps you to reduce your overall risk, it is much easier for you to manage your overall trades, because if you are a non-discretionary trader, then you have to observe how these different instruments performs. Like if it is commodities, then you have to observe from morning to till night. If it is currencies, you have to observe USD, INR and multiple other instruments, and then you have to place the trades. But being a rule-based trader, it clearly defines the rules. Okay, these are the instruments that you have to trade, and this is the entry rule, this is the exit rule, and this is the target, stop loss, everything. All you have to do is just select the instrument, place your entry, place your stop loss or targets, and just leave it to the system. And then when the system gives us an exit signal, it is automatically going to exit for you. So it makes it much easier for you to diversify across multiple instruments when you follow a rule-based approach. The biggest and the most important advantage of rule-based trading is having an emotional balance. So most people tend to panic when a specific stock goes against them because they do not know what needs to be done at that point. But rule-based trading helps you greatly with controlling these emotions. So it clearly defines you like when to exit and when to enter, and everything is clearly defined. So you will not tend to panic. So all these emotions of greed, fear, panic, everything will be controlled when you follow a rule-based trading. Let's look at what are the disadvantages of rule-based trading. So one of the main disadvantage I would say is adaptability. As you know, the markets tends to change and it doesn't keep following one specific rhythm. So there will be high volatility phase, there will be low volatility phase. Market tends to keep changing its movement over the period of course. So when you create certain rules, it could be working for certain period of time, and it might not work for certain period of time, and again it would start working. So what people would think is, when a particular system or a particular trading rules doesn't work for 3 or 4 months, they tend to think that it stops working. But no, the main disadvantage is this rule-based trading could go out of sync when the market regime changes, when the market movement changes. So it is hard for traders to stick to the trading rules when your system goes into a prolonged drawdown. And one more disadvantage that I would see with respect to rule-based trading is, end of the day, it's all about the person who is creating the rules. So it is based on your observation in the markets, based on your knowledge, you are creating your own trading rules. So you have to be really knowledgeable about the market so that you could create the rules and trade based on that. So you need to learn more and you need to put efforts more to come up with certain trading rules. So you can't go to a computer and ask them to create the rules for you. So it is completely up to you and you need to create the rules. So this is one minor disadvantage, but end of the day, it's all about the person who is creating the rules. And the last disadvantage that I would say with respect to rule-based trading is curve fitting. What it means is, when someone is getting into rule-based trading, for a completely new person who is getting into rule-based trading, he tends to use the past data to give the best results. So they'll try spending so much of time in backtesting to give the best results. So they completely optimize multiple parameters, and due to that they end up with best backtest results. and these backtest results, if they go and deploy the same rules in live, it might not work, because they are trying to change multiple parameters based on how the market behaved in the past. So for an example, if someone is keep changing multiple variations, like okay, Monday I wanted to use this stop loss, Tuesday I wanted to use this target, Wednesday I wanted to use this timing. So when they keep changing all these little parameters, and then if they finally get the best backtest results, then they think that is the best rules that they need to follow in live markets to get the best results what they have seen in the backtest. But this is what curve fitting is. So this is a big disadvantage with respect to rule-based trading. But over the years, once you spend more time onto it, you could easily overcome these disadvantages. So compared to disadvantage and advantage, there are more pros than cons with respect to rule-based trading. So definitely I would recommend more people to move from news-based trading to rule-based trading. So if you guys have any questions, please post it in the comment section. I'll address it. Next week, I'll see you guys with a different topic. Thank you. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.